everybody. It's Modern Investing on Pod TV. My name is Sasha Star, and we have a guest today, Dr. Milan Sombarak. Welcome to the show, Milan.
Delighted to be here. Thank you for inviting me.
My pleasure. And Jim Eat from Eat Foundation. Welcome to the show, Jim.
Thank you, Sasha. I'm delighted to be anywhere.
My pleasure. Well, today we have Wednesday, but market is down because it's a short week. We started on Tuesday. So today's Wednesday feels like Tuesday of regular week. But we'll see. Obviously, the market cannot go up forever, and it's been a tremendously great market last year. It's now in a hiccup stage early January. It's already mid-January, actually. It's not so early January. But we'll see. We'll see. We still have earnings season is ahead of us, and I don't think that market can do anything without help from high tech, specifically Magnificent Seven and Nvidia as number one of all those stocks. But we'll see. Nvidia, by the way, down today. It's recovering right now because it was substantially lower at the beginning of the session, but it's recovering. I will not be surprised if it will end up in plus territory by the end of the day. Milan, how are you doing these days? What's happened interesting?
Well, we think, Sasha, that the coming year, 2024, interest rates are liable to go down. They keep looking at that. And so it's a great time to have an asset allocation that's more in market than in cash. We used to be, for the last little while, we were 60% in cash. And my wife and I went to 50% in cash today. And we bought some more SPY so that we could write covered calls on it. In Canada, in tax advantage portfolio, you are not allowed to write cash secured puts as you can in the United States. So it's a great time to be selling covered calls because the put call ratio is negative for the day, for the week, for up to a month from today. So it's a very safe time to be writing covered calls, and we generated a nice pile of cash. You know, our program is called Monday Morning Millionaire because many of our members who are close to retirement or retired make more money on Monday before breakfast than during the best week that they had while working.
The only problem being, Milan, that a lot of Mondays market is closed. So your program should be Tuesday morning.
Or when it's closed, we make it Tuesday. Yeah, that's right. But yeah, you're right about that. So we did very well today. We're happy about that. Now, we discourage you, talk about NVIDIA. We discourage our members from buying individual stocks. So, for example, David Svensson, who headed the Yale Endowment Fund, died recently, and his performance was better than any other endowment fund of any university by far. Harvard has a bigger endowment, but it did not perform as well in percentage terms. And somebody like David Svensson says, security selection and market timing make no material contribution to returns. So we discourage our members from buying individual stocks. Buy the American economy as a whole, as reflected by an exchange-traded fund, which tracks the S&P 500. Now, there are more exchange-traded funds today than there are individual stocks at the New York Stock Exchange, but only half a dozen or so track the market as a whole, the best performing market in history for over 100 years. And so of those half dozen, SPY is the best because it's the oldest, the largest, and the narrowest bid-ask spread of any of them. Now, a lot of investors don't pay much attention to the bid-ask spread, but it is one of the expenses which we have as investors. And so we want that to be minimal. And with SPY is the smallest that there is. So now, Svensson also said, when you look at the result on an after-fee after-tax basis over a reasonably long period of time, there's almost no chance that you end up beating an index fund. So we discourage our members from owning individual stocks. We encourage them to put their savings into SPY specifically, just because it has the narrowest bid-ask range. It traded very heavily. And so David Svensson did not take market wizards into account, because, you know, Warren Buffett has done much better than the market has over more than 50 years. So there are market wizards, but most people are not market wizards. And so we discourage people because, you know, for our members, most of whom are professional people, they are making more money from the work that they're doing, from their job. Unless they're retired, they're making more money from the work that they're doing than they ever will by investing until they retire, until they get to that point. So Svensson also said that asset allocation accounts for the largest part of portfolio returns. So my wife and I today readjusted our asset allocation to be 50-50, which is something that Wall Street doesn't like. I keep saying all the time, Wall Street is not our friend. They don't want us to have any cash because they're not making anything on that cash that's sitting around. So our asset allocation doesn't make Wall Street happy, but it makes us happy, because that is the best way to get the most out of the market, because you're always in cash, which makes it possible to buy the market when it drops, which inevitably it will sooner or later. So that's where we are now. So we sold some covered calls on our portfolio, which is now 50% in SPY. And like I said, we did better than I ever did while practicing dentistry. So that's where we are, and we intend to continue rules-based investing. If I can continue along this line, you know, there are two aspects of investing. One is rules-based, and the other one is judgment-based. Rules are always correct. Judgment sometimes is, sometimes isn't. Very frequently it isn't. What are the rules? Number one, save. Without that number one, nothing else works. Number two, do it yourself. That's the first, Sasha, your members, people who are following this program, are doing it yourself. Do it yourself investing can save up to 1 full year's income over the course of investing. Number three is buy the American economy as a whole, not individual stocks. Economy as a whole, as reflected by fund like SPY. So that's number three. Number four is don't trade. Buy and hold. Number five is adjust your asset allocation when market movement changes it. If the market goes up, for example, you will wind up having a higher percentage in the market than cash, so then you take profits. When the market goes down, you will have a larger percentage in the market than in cash, then you take profits. Yeah, and when the market goes up, you take profits. When the market goes down, you buy bargains. You're always buying bargains. You're always taking profits. Interestingly, the people who will drive across town to save a few cents on a loaf of bread or some other groceries are running for the doors when the market drops. When the market is a bargain, people are not buying into it. Most of them are not. We are. When the market is expensive, people are jumping on board, buying it expensively.
Milan, this is a very easily explained phenomenon. I'll tell you why. Let's say a loaf of bread historically costs, say, from $2 to $2.50, say $3 or whatever it might be. Let's see it went down to $1.50. So it's historically low price. And then next day it went down to $1.25. Okay, it's obvious that it cannot go any lower than $1.25. Most likely it will recover and will go to $1.50 and maybe $2 or so. So buying a loaf of bread for $1.25, it's a great bargain, which is very, very difficult to prove wrong.
Yeah.
Now, when the stock goes down, let's see stock like it used to be Nortel, Northern Telephone. It went down to from $1.20 to $60, and it's a very quick.
It looks cheap.
Really
Yeah.
And I had a friend of mine, actually a chess player. He said that he's now arranging mortgage on his house. He wants to buy Nortel stock.
Did he lose his house?
I asked him, wait a sec, what makes you think that the $60 is the lowest ever price? Why don't you buy it at $55? It's much better deal than at $60.
Yeah.
He said, yeah, I think, okay, I'll wait for 55. Well, in 2 weeks, it was already 35, and it went down all the way to $5, and then 50 cents, and then it disappeared. So this is why I'm a little bit skeptical about, especially now you're contradicting yourself. You're saying that Wall Street is not your friend. Okay. So now by bringing 10% of your investment to stocks and selling covered calls, you are actually helping Wall Street to make more money, because they're making money on your investment. They're making money on spread between bid and ask on options like covered calls, and also. So you are working for Wall Street, right?
They're not making a lot on the cash.
No, not a lot. You're right.
Yeah.
You're right, but still they're making some money.
Yeah, they are. Yeah, we have to have Wall Street. We have to have somebody who's going to execute our trades.
But helping
But
you.
they want us. They do everything possible to make us active traders. So there was a man who worked for, I'm not sure which Wall Street bank he worked for, and he left them for a number of reasons. One of which was that they called their clients Muppets. Muppets are incompetent people, so they refer to their clients as Muppets, and they spend their meetings, an hour-long meeting, which they regularly have. They spend those meetings devising ways to get more money from their clients, entirely devoted to getting more money out of you and me. They don't spend 1 minute showing us how we can make more money. Wall Street is not our friend. We have to have it, because somebody has to execute our orders.
I'd like to be your friend, but that's possible only if you're listening to me. You're not, apparently, because if you'll ask me, my record for the last 12 months to be exact, is 181% verifiable on paper, easy to be demonstrated.
I said before, Sasha, you're a market wizard. Most of us aren't.
I'm doing so obvious things, to me at least, that I kind of refuse to accept any titles. It's just that my goal for the next 12 months is to make twice that amount, 360%. I don't know if I will be able to do it that way.
Well, David Svensson suggests that you will not be able to do it, but there are market wizards, and you're one of them. Interestingly, when Enron tanked, and a lot of people lost their jobs, and they were encouraged to invest in the company itself, and people in their 70s or 80s now lost everything, and they wind up being greeters at Walmart or doing basic jobs. That's what happened to Enron, and many people connected to Enron went to jail. At Nortel, nobody went to jail, and the people at the top walked out rich.
Because it's a Canadian company. And in Canada, there are no customs to put people in jail for stock inflated prices and outright fraud or so on. It should be, but it's not.
Well, it should be. We encourage our members to invest in the American market entirely. In the year 2005, the Canadian government gave us the biggest gift they had ever given us, which is they removed the foreign content restrictions in our tax advantage portfolios. Prior to that, there was a limit to how much you could have in a foreign investment. They removed that in 2005. The government can't give us anything that they haven't taken from us in the first place, after they dumb it down through management costs. But they can change regulations. We never know what taxation is going to be. And we very often don't do very well when tax rates change, and various other regulations out there. But that removing foreign content restrictions was the biggest gift that the Canadian government has ever given
But
investors.
I'll tell you that the best Canadian public companies are all listed on U.S. exchanges. And by the way, well, for example, say Canadian Imperial Bank of Commerce. Okay, I have holdings in that. It pays good dividends and pretty good company. Now, I could buy it on TSX, on Toronto Stock Exchange, and I could buy it on New York Stock Exchange. And guess what? I bought it on New York Stock Exchange, not in Toronto. Why?
Yeah, why?
Because it's much more liquid there. There is a much less spread between bid and ask. And more important thing is that there is an option trading, very active option trading with very
Mhm.
small spreads
In New York, but not in the Toronto Stock Exchange?
in New York.
Oh,
And
I see.
there is a lousy, there is no volume. There you have to sell by appointment only. You have to be sitting for 3 days to extract a reasonable price for covered calls or so on. So same thing with Enbridge. Enbridge is also listed on Toronto Stock Exchange, but it's also listed in the United States. And I do all my trading on on Enbridge, sorry, on U.S. market, not on Canadian, because it's much
Well,
easier.
we don't agree on everything, Sasha, but this
Yeah.
is an area that we do agree on. Our members have been encouraged to be only in the American market since time began. Now, we don't pay no attention to what's happening in the Toronto Stock Exchange.
I don't have a lot of holdings. I have all my holdings at present time, maximum 10, sometimes 12, but no more than 12. And sometimes it's 2, 3 positions at all. And I'll tell you that liquidity is number one. The liquidity is definitely in United States markets, whether it's NASDAQ, whether it's in New York, or so on. Mark, you have a question?
Yeah, I do have a question based on this buying in the American market, and this is for you and Jim, and even Nick might want to jump on it as well. I know that here in the what we call the Research Triangle Park, there are a number of companies that are American traded, but they are not American oriented. Because Ron Polnick, I believe, is a French-based company. I know that GlaxoSmithKline is British, and there are a number of other companies that are, while they are American companies in the sense of being traded in America, they are not necessarily American-based companies. I don't know how many American-based companies there are. I know Caterpillar is still American-based, and I think UAW, some of the automobile, is American-based. But how much of the trade? That's my question. How much of what is on NASDAQ is actually really truly American companies?
Does it matter?
What do you mean by American company, Mark? Do you mean where the headquarters are? Because most large companies have a presence in almost every country in the world.
But that's what I meant, where the headquarters are located, because a lot of times the companies are located elsewhere. I mean, one of those people that we talk a lot of junk about and everything, that being Mr. Trump, is always talking about wanting more American-based companies and all along those lines. So that's part of where I was going at, because even some of our own listeners are very big into American-made products and all along those lines. So that's why the question came around, because if I was to go, and Nick, you can disavow me if I'm wrong and everything, but if I was to go to RTP, I would guarantee you that the majority of those companies are actually based elsewhere. They're not actually based here in the United States and everything, because they're
A lot of high-tech companies, the giants, they have head offices, a lot of them in Ireland, because they have the lowest corporate tax. And they don't care to have headquarters in the United States, where tax is much higher than in Ireland. So what do you want to say is that? You want to say that Microsoft is no longer a U.S. company because its head office may be located in Ireland, or it doesn't matter at all. When you look at the company, when you look at their revenue, when you look at their profits or so on, who cares? So,
yeah, plus they have subsidiary companies. When we were working with Principal Financial, which is about a $500 billion company, we're handling all their plans west of the Mississippi. And the 500 billion, most of it was U.S. based, but they had subsidiary companies in Argentina, they had subsidiary companies in Brazil, they had subsidiary companies around the world. So it's not unusual. This whole concept of, make America great again, you're only manufacturing in the United States, it's probably antiquated, because what happens, and we'll just pick on Boeing, for example, even though they're headquartered in the United States, they buy a lot of their products all over the world, and then they assemble them here in the U.S. Also, Milan, when you're talking about, it sounds to me when you're talking about Wall Street, now your friend would talk about stockbrokers. The people that we work with a lot are asset under management fiends. In other words, What they do is they say, hey, I'm on your side, Milan, because I charge a 1% asset under management fee. If I make money, you make money. So what's wrong with that? I don't encourage stock trading because I only make money when you make money. What are your thoughts about the asset under management model?
Asset under management is how these people make a great deal of money. Regardless of what the market does, they're making their money from the assets that they have under management. And that model is hardly acceptable anywhere else. Suppose you went to your dentist, speaking as a retired dentist, and you needed a crown. And the dentist said, okay, what is your net worth? Because I'm going to charge you a percentage of your net worth. That's exactly what's happening on the stock market, assets under management. So you it's laughable to consider that.
Well, then how should they charge? Because I talk to these people all the time. They're asset managers. I'm going to take $2 million under management to my average account. I'm going to charge a 1% asset under management fee. So if I grow the 2 million to 3 million, I make money. I make from 20,000 to 30,000, and you make money. You make $1 million. What's wrong with that?
This asset under management, where they charge you as a percentage of the size of your portfolio, is wrong because they had nothing to do with the building up of that portfolio. When you invest the money that you have earned over the course of your working career, you have earned that money, but they charge you on the basis of the size of that portfolio, even though they had nothing to do with that portfolio at all. When you take a look at hedge funds have occasionally done very, very well. The first hedge fund that did well was, I think, Steinhauer, who managed to make money for himself, very wealthy man, but for his investors as well. But most hedge funds have done very badly. When you look at the hedge funds as a whole, they don't compare to owning the market. Now, people get into hedge funds because they have fewer regulations, and so they can invest more widely and take greater risks. And the greater the risk you take, the greater the potential return, not the greater the return, the greater the potential return. And some have done very well over short periods of time. Over an extended period, holding the U.S. market as a whole has been the investor's best friend.
Yeah, along those same lines.
Change.
I just had a quick question for Sasha as well and everything. How important is it, because we talked about it a little bit on, I think it was World Edition and everything, for you to invest in companies that have a diversified portfolio? Because a lot of people are looking at, say, an Elon Musk or even a Bill Gates because they don't have just one business interest. Their interest is in a number of businesses and everything. So I was wondering, how important is that as an investor to invest in companies that have their irons in different pots and everything, if I can use that analogy and everything. So how important is that?
Are you asking Sasha or the rest of us?
Any of you. But I asked Sasha, but any of you.
Well, can I make an addendum to that question? Because that is a good question mark. That's a good thing. There's a gentleman by the name of Bill Gates who listened to diversification from another gentleman called Warren Buffett.
Right.
So he diversified his portfolio over a period of time, doing systematic selling of Microsoft stock. And he's worth $230 billion. However, if he kept Microsoft stock and didn't listen to Warren Buffett, Bill Gates would be worth $1.3 trillion. So with that, you can address the question, Counselor.
Okay, I'm obviously not friend of diversification. Diversifications is for scared people who are most likely trying to protect their portfolios. And in fact, the effect is quite the opposite. Their portfolio is going down, especially if they are one of these management companies. It charges actually most of the companies charge 2%.
2%.
Most of the companies. Nick, it's a well-known formula, 220. They charge 2% management fee on overall portfolios that they handle, and 20% of the profits. But what's interesting is they're not responsible if they have losses. Losses you eat 100%. And to bring insult to injuries, there is still 2% management fee, or
Yeah.
in your case, 1. So that's normally 2%, and on top of all your losses. Okay, once that happening, now you agree 100% with Milan that Wall Street is not your friend, or so on. Actually, it's your enemy. It's trying to kill you, and so on and on and on. I understand that. I have a couple of friends that. Followed my investments and results, and they asked me what I would offer them if I would take some of their money to manage. I told them a very simple thing: no management fee. Number one. Number two, no losses. If they invest $100,000, they will always get back $100,000, even if the stock market will collapse down to zero. They will still get $100,000. Half of that I can guarantee by cash, and I can guarantee 100% by cash. I just don't want to do it. I don't want to tie up my cash. Number three, now that comes a little bit heavy, but it's a compensation for number one and number two. After first 10% of profit, which go to investor, I don't touch that. But the rest of the profit, which is on top of 10%, split 50-50 between me and investor. Okay. That's a deal. I stand behind that. I have a couple of investments already. And let's see how it will work during the next few months. I will make a more formal offering to that regard.
That's a very generous arrangement, Sasha. Tell us again how you can guarantee their $100,000 in spite of market drops.
What's your expectation of market drop? Is it going to be 100%? No. Is it going to be 50%? No. 25%?
Yeah.
Possible.
30%. It's done 30%. That's
even 30% possible.
Yeah.
Okay. So you have to see a scenario where, let's see, by February 1st, a person invests $100,000, and during the year until February 1st, 2025, it's lost exactly 25 and or 30%. So then I would be on a hook to pay this investor back $100,000 plus 25 or 30, whatever's been lost. That's my risk. My reward, if I will generate, okay, I'm not going to go to 180%, but even if I will generate, say, 40-50%, which is highly unlikely that I will not generate that. So then from $100,000, you see profit $50,000. And my cut of that would be 10% will go to investors, so 40 divided by 2. So I will generate profit of $20,000. It's not a worst case scenario, but it's not best case scenario for sure. So this is kind of an average. So it was a completely difficult market. I was somewhat successful, not as much as I wish, but still. And that's basically all the risk I'm taking. If I will not be able to generate more than 10% return, then it means I made a zero. Okay. Now, if I generate 0% return, it's still a zero for me. I'm not losing anything, but I'm not making anything. Same as it's only 10% profit. I'm not touching that. And if it will lose 5, 10, 25%, whatever it might be, then I'm responsible for that. So I'm taking responsibility for my words. When I'm telling somebody I was very successful, I made so much money here and there, and so on, I eliminate all questions about validity of my claims. Everything is documented anyway, and also I being responsible for my promises or so on. So I'm on a hook. I'm in the same seat as an investor. And I think for investor, it's a pretty good deal because he's guaranteed of losses. And I never heard any mutual fund or ETF or anything that would guarantee you from losses. Never heard.
That's very good. It works for you. That's a lovely setup, Sasha.
Yeah.
Now, we were asked about diversification. And the term that I've heard used is diversification. And Gerald Loeb, who was the most quoted man on Wall Street until Warren Buffett came along, he said, put all your eggs into one basket, but then watch that basket.
Of
And if,
course.
and if that basket happens to be the United States economy as a whole, such as owning SPY, you're safe. Yeah, sometimes the market will drop as much as 30%. It has done that. The money that you're going to need next month, in the next couple of years, to buy your groceries and pay the rent and take a holiday and buy a car and so on does not belong in the market. But what you have in the market will do better than any other investment unless you cherry pick. People have made a lot of money in stamps and in violins and in silver and in gold, but the market itself has been better than any other investment over a long period of time, taking into account the fluctuations.
Jim, I would like to ask you a question. How you see the direction of U.S. economy in this presidential cycle with the election coming up? And how do you think the stock market will fare based on the election motives?
Well, yeah, I have a number of comments to make, but to answer your question, the market doesn't like uncertainty, and I think there's going to be a great deal of uncertainty around this election. So I'm going to be very cautious in 2024, but that doesn't mean I'm going to be inactive. And I think the overall uncertainty is being fueled by the Fed's reluctance to lower interest rates. Because, as the bond yields go up, the stock market goes down. And bond yields are going up now. And the Fed's got to just regain its sanity and lower rates. And when they do that, the market will respond to that. And that will be a very positive development. And they've been hinting at it, but they haven't done it. And I think when they do, and I hope that they do, that will be a boost for the market in general. But the closer we get to the election, it's going to get dicier and dicier. I wanted to respond to the idea that some headquarters aren't here. I agree with Sasha that it doesn't matter. We're in a global economy. We're not a global community yet. We got a long ways to go before we're that, but we are in a global economy. And
Do you think we have to change slogan instead of "Make America Great Again"? Make it to "Make Ireland Great Again." That would be much better slogan.
And full disclosure, my wife worked for a company that had headquarters in Ireland, and I had so many free trips and boondoggles in Dublin because of that. And we would always go to London or Paris after that. So it was a wonderful setup for me personally. So I have no beef with companies being headquartered over there, but I do believe in investing in the U.S. market. And now, as we've talked many times, Sasha, I believe in like a sector of semiconductors has been where I've been putting my energy into, or my money into in 2023, and done quite well. We've been talking about AI as and who's going to benefit. And obviously, we've both been involved with NVIDIA. But the other one that I had been talking about for a long time, I've held for a long time, was Taiwan Semiconductors. And Taiwan Semiconductors, I just sold. Not because, and I do believe in the discipline that Milan was talking about. I didn't quite hit my target, but I got a nice return. But the reason I sold was Taiwan just had an election, and they elected someone that the Chinese are not very happy with. And so the tensions, I don't believe that China is going to invade Taiwan, but I think the market is going to get jittery about that. And so what I did was transfer it to another AI company, Marvel Technologies, MRVL and I didn't have a chance because of the election results kind of forced my hand. I didn't have a chance to research it as much as I normally do, but I did do some research, and it's done very well, and I expect it to continue to do well. It's not in the category of NVIDIA, but it's in the same area. It's in the same field, and they seem to be making money. So earnings are another thing that I look at. If you have a product and you're not making earnings, then I'm not really ready to invest in these, but they are. And so I've been tracking them for a while, and now I've actually put my money where my mouth is. And the other thing that I look at is companies that are sound companies but have been beaten down. And Intel was one of those. You know, I own AMD stock. You know, just invested in Marvel and sold Taiwan Semiconductors. But Intel was you know, kind of like dusty and not keeping pace with the AI developments in the world, but they changed their philosophy, and now they're putting a lot of research and development into that. And so I expect them to do well. And both Intel and Marvel were much cheaper than NVIDIA. Now, I sold NVIDIA probably too early, but it was my discipline. I made the target investment that I wanted. I made as much money as I had projected that I would make. And then I got out because that's just part of the discipline I use in investing. And so this has done well for me. But I want to also differentiate. We've done it many times between our core portfolio, which we handle one way, and the fund portfolio, which is not what I'm talking about now. You know, I would never invest in Intel in my core portfolio,
Yeah.
for example.
Yeah.
Jim, something I would like to ask you. When you're saying that both Intel and Marvel are much cheaper than NVIDIA, I think this is not a very good reasoning of buying these two stocks versus NVIDIA. I'll tell you why. Because let's say you have allocated to investment in cheap companies, say some $100,000, for example, right? So obviously you will buy many more shares of Marvel or Intel or both than NVIDIA, simply because indeed they're cheaper. But doesn't that reflect the potential of investment? Because let's say you have 20,000 shares of either Intel or Marvel or both, or you will have as alternative only 5,000 shares of NVIDIA, probably even less, but just for an example. So those stocks will go higher if all market for semiconductors is going higher. So they will go higher a certain percentage, and NVIDIA will go higher a certain percentage. And it's quite possible that that certain percentage will be higher on NVIDIA, because you can't today picture the artificial intelligence company which is not using NVIDIA chips.
No, I agree with your reasoning, Sasha. I
Yeah.
absolutely do. But it's a question of me getting into what you've been training me on is puts and calls and options.
Mhm.
And so I wanted to get a certain amount of leverage there so that I can start. So buying you know, even 100 shares of NVIDIA is a certain amount of capital outlay. And buying 100 shares of Marvel, for example, is more trivial.
Absolutely.
So that's basically, and I'm going to, in my fund portfolio, play around with this and, you know, covered calls, for example. It's not something I've done in the past. In 2024, I plan on doing that a little bit. But your point is well taken. And I do think that NVIDIA is still a good buy. I just,
There is rumors that they're considering stock split, which they did 3, maybe 4 years ago,
Yeah.
and about the same price. And the price of NVIDIA at that time reached over $500 a share. They did the stock split, I think 4-1, and I
Yeah.
think it's
and
coming.
it's for that reason. Yeah, I had a lot of stock in Charles Schwab, and they went through multiple splits.
Yes,
And it was, and then the price went up again. So they would split again, and the
exactly.
price went up again. So
Same
yeah,
thing happened to
that will be
Tesla.
very attractive to me if they do a split.
And Tesla is the same thing. When they did stock split, the stock went higher. And right now, I don't expect much from Tesla these days, unfortunately, because we're all hostages of what's his name?
Musk, Elon Musk.
Elon Musk.
Elon Musk. Yeah, and a lot of people love him, and a lot of people hate him. So we'll see which way it will go. But this is quite risky. Now the Bitcoin started to go higher, then now it went lower. So it's still very unclear where it's going to go. And a lot of people taken sidelines simply because they don't understand what drives the price movement of the bitcoins. And I must tell you, I myself, I don't understand quite well
No.
what's driving the
No,
price.
I've been staying away from it because of my lack of understanding in general.
Yeah, I really do. Milan, do you have any bitcoins?
Well, James, you said that you sold security too early, it kept on going up. One of the Rothschilds said that I made my money by selling too soon.
Yeah.
Don't feel badly about
I'm
it.
happy with my outcome, yes.
But I wanted to ask you a question. Make America Great Again under Trump's vision requires manufacturing to take place in America. Manufacturing is a boring job. People hate Mondays. They love Fridays. People who are involved in manufacturing. So
Yes.
can manufacturing be replaced by innovation? Because we in North America are good at innovation. And can it actually replace manufacturing? Let the countries that manufacture, China has been such an example. And even the Chinese now are taking the manufacturing elsewhere. I think Vietnam or somewhere,
Yes.
where it's costing them even less to manufacture. And then they're selling it to us. But can that manufacturing, we live in a town that depended on manufacturing. It's a ski town now, but people were making good money and then building shipyards. But South Korea was building ships at a much lower cost, and our shipyard folded because it stopped getting government subsidies, which it used to. We are better off than we ever have been before in many, many ways. The water is cleaner. There's fish and beavers in the water that we didn't have before. Manufacturing has left. Can innovation replace manufacturing? Because people who are involved in innovation love
Short
what
answer.
It's not just fishes. There are also the pirates and bandits in Red Sea who are making navigation in Red Sea next to impossible. So the ships, they have to go around Africa to reach the ports. So
Sasha, it's not just pirates. It's not just pirates in the Red Sea. I have a dear friend of mine who is from the Virgin Islands in the Caribbean, and he actually lost two of his sons. I forget whether he's got three or four because of the pirates that are there in our own hemisphere as well. So the pirates are even in this area as well, because like I said, he lost both of his two of his sons to pirate attacks and all in that space.
Well,
so it's definitely there.
I'm talking about particular group by the name Houthis. If you want to disqualify them as pirates, I have no problems with that. But what they are doing, they are hitting the world economy because now all shipments becoming more than 50%, sometimes 100% more expensive. And that where now the inflation is probably one of the most important themes in world economy. They are inflicting irreparable damage to the world economy. This is why they have to be gone.
I don't have to tell you about the Russian invasion of the Ukraine. You know, the Ukraine produced a lot of grain. And so there's famine in the world as well. So it's not just inflation, but it's feeding people that's at stake in some of these hostile environments.
Well, I was talking particularly about Red Sea.
Yes. And absolutely, it's a serious issue. And, you know, the Arab countries have to come and be a partner to solving this problem. And, you know, whether they will or not, it's an open question. But, you know, my mother still lives in a town that was, you know, on a river and a railroad. And those were very important in terms of manufacturing and distribution. And, you know, that all of New England suffered tremendously when those no longer were important in terms of developing products. But now New England has bounced back because of innovation. And many of these things, not only can they be done, that they have been done. They've been, because, you know, bringing manufacturing back to these towns isn't possible. The textile
Jim, along those lines and everything, North Carolina, and particularly Durham, where I'm at, and where Nick also is now living and everything, was literally built on tobacco and a lot of manufacturing jobs. And a lot of those jobs are now in that innovation space. I can't tell you how many computer companies there are here in this area, because this has become almost like another version of a Silicon Valley and everything, because they did what Milan is saying. They shifted from manufacturing, and the manufacturing companies have been converted. Many of them even converted into housing, into innovative type jobs. As a matter of fact, I believe that that's part of what President Biden will be talking about when he comes here tomorrow, because he'll be visiting tomorrow to North Carolina, talking about the CHIPS Act and innovation. So innovation has
Yeah, the
become
CHIPS Act
very
is really
big.
important, and this is the thing about manufacturing. When it's in the national industry defense best interest, then by all means keep it in the United States. This is why the CHIPS Act was important. It's important to be able to provide your semiconductors in your country, because you cannot rely on allies even being able to distribute their product to you in times of war. So, this is why we have made, and also the shipyards. That's another thing that's been on the table recently. Can we build our own ships anymore? When COVID hit, we could not provide nurses and doctors with the protective gear. We had no way of manufacturing that. So and the shipping distribution, the global collapse of the distribution system prevented us from acquiring it.
Yeah.
So we've got to have our heads on straight when it comes to what manufacturing do we need to survive in times of pandemic, in times of insecurity militarily. All of these types of things, they have to be based in the United States. Everything else can be shipped out. It's all, it's not important to the world's global economy now where it's made, except when it's in the cause of national defense.
National security or national defense. I know you're going to end, Sasha. I do have to tease Jim about something that he said earlier about Ireland and being that trips to Ireland and all along those lines. Because while I asked y'all that question, I have a number of friends that work for those companies. And one of my good friends has actually worked for a number of pharmaceutical companies. And one of the reasons that I get a little jealous of Murdy sometimes is because her job literally gave to have her travel the world more than I've traveled the world, because she was a sales rep. So for those sales reps for those pharmaceutical companies, every time I would talk to Miss Murdy, she'd be off to Brazil, off to England, off to France, and a number of other places, because
you got to be young to do that job. Yeah, you got to be young because you're changing time zones. And you got to be on all the time. That's it sounds better than it might be living that life.
That is true.
And pandemics will keep on happening. New pandemics will keep coming up. After the First World War, there was a Spanish flu, which killed more people than died in that war. I don't know what kind of numbers died as a result of the most recent pandemic that we have had, but they will keep on happening. It's just the way nature works.
In the First World War, died probably more than 10 million people. And I'm not so sure that the Spanish...
I think he's talking about American loss of lives, but
American?
yeah,
I see.
yeah. The idea is
Okay, got it. Yeah, most likely, I would agree with that. Yes.
And these pandemics or like Mother Earth thinks of the human race as the virus now, so it's going to keep manufacturing these things to make us sick because we're making it sick. So we're not being very good stewards. But there's another opportunity for people that are using, like Nick was on telling us earlier about hydrogen powered, or I'm not sure, it was solar powered. I can't remember what the terminology was, but it was a way to make water out of air. And so these types of innovations will continue to happen, and they're not necessarily going to solve climate change. We have to be more prudent in our stewardship of the planet, but innovation is definitely going to replace the old manufacturing jobs. And as Milan said, the old manufacturing jobs will not remain. Assembly line workers, that was a rough way to make a living. It was the best they could do, so they did it. But if you can be more innovative, have got jobs that actually have some variety in them and keep people engaged, and so that they're not eating work on Monday.
Jim and Milan, I just looked it up just out of curiosity and everything, but they said that the suspected cases of the Spanish flu was something over a 2-year span of 200 years and 2 months of 500 million, and the death rate fluctuated. There were some estimates as low as 17 million and some estimates as high as 50 million and everything. Yeah. So it definitely had a devastating impact during that time in our history.
And also it came back. Sometimes people forget that it was, there was an event that happened and then it did not go away. It came back,
Right.
and more people died. Philadelphia stands out for some reason in my mind as a place that got hit twice, got hit really hard.
It had one of them had the World Fair, and the World Fair kind of instituted a re-emergence of it during that time and everything, because people were thinking it was done.
One area that we should mention is lab-grown meat. Raising cattle has an enormously negative effect on
Absolutely.
the environment, and that someday will be totally replaced by lab-grown meat, which is identical in every way. For example, a lab-grown chicken now is available in Singapore. People can go and have lab-grown chicken, which is exactly the same as if that cell has multiplied inside a chicken or inside a laboratory, a petri dish. And it's
Hey, Milan, you must have been listening to our news show, because one of the things that I mentioned just as a set aside during the end of that show was that, there's been people that have been poaching rhinos and things of that nature because of their horns, and there are lab grown versions of that as well. So they're actually lab growing parts of the body, including the horns and other things that the rhinoceros and the elephants have done, and that are being poached and everything. So,
and it's a question of water supply as well. If you can replace meat and you're not raising cattle and on those types of lands, which require enormous resources in terms of water, and the aquifers are drying up, and so you can reuse these things and retain more water. This is the way of the future. It's going to take a big adjustment, certainly on the American side.
Interestingly, you can't make water and you cannot destroy water, but you can certainly mismanage water. The country that has the most water is Brazil, because of the Amazon. Second most is Russia, because of Lake Baikal, I think. And the third is the United States. Canada has less water than the United States.
That's hard to believe.
Distributor
If you're talking about per capita, Canada is by far the richest water country in the world. Per capita, per person, okay? Canada is by far the richest the water country in the world.
Yeah. But the United States is mismanaging water.
Yes, horribly. Yeah.
Anyway, listen, there are a lot of problems in this world. We will not be able to solve a lot of them today, but we are trying. We are trying for sure. So thank you so much for participation in today's program, and we'll see you next week, same place, same time, and good luck in your investments.
Thank you.
Bye-bye.
Bye-bye. Until next week. Thank you.